For months, borrowers have been clinging on to one hope. They were praying for a lifeline. On January 28th, the Bank of Canada cut that lifeline. They held the rate at 2.25%. Now, 2.25% might sound low compared to where we were in 2024, but for anyone renewing a mortgage this year, that number is not a relief. It's a trap. If you are waiting for a massive rate cut to save you before your renewal, I need you to hear this. That hope is fading. Well, actually, it's gone. We are looking at the data, and the data says we have arrived at the 2026 mortgage cliff. 1/3 of all Canadian mortgages are coming up for renewal this year. 1 out of every 3 homes on your street. And the new data confirms that for a massive chunk of those people, this isn't just a paperwork renewal. It is a full-blown financial crisis. Let's look at the numbers because the headlines are misleading you. The Bank of Canada actually released a report, and if you just read the summary, it looks manageable. They say the average renewal will see a payment increase of about 8%. 8% sucks, but it's survivable. You skip a vacation, you eat out less, you make it work. But here's the thing about averages. Averages lie. They smooth out the pain and they hide the disaster. I want you to look at the far right of this chart. Do you see that red bar? 25% of borrowers, that is hundreds of thousands of Canadian families, they aren't facing an 8% increase. They're staring down a payment shock of more than 20%. Some are seeing their payments double. Who are these people? How did they get here? These are the people who bought in 2021 at the peak of the frenzy. They bought when the prime rate was near zero, and they did what everyone told them to do. They went variable. For the last 2 years, they have been riding negative amortization, or they have had static payments. For the last 2 years, they've been riding negative amortization, or they've had static payments. Essentially, the bank kind of just let them drift. Their monthly payment didn't cover the interest. The principal on their loan actually grew. Well, the party's over and the bill is due. The bank is saying, you need to pay us back now. This specific cohort, the 2021 variable buyer, this is where the bleeding happens. The distress won't be market wide. Your neighbor who bought in 2018, they might be fine. But the distress will be highly concentrated right here, and this is where we will see forced selling in 2026. Now, let's talk about the solution everyone keeps throwing around. Just go variable again, ride the curve down. It sounds smart, right? Well, if the Bank of Canada cuts rates later this year, you save money. Here's the trap though. And this is what the bank tellers aren't allowed to really explain to you. Even though the overnight rate is 2.25%, the discount you get off prime is shrinking. Actually, you might get prime minus 1% or prime minus 0.9%, but right now, those spreads are tightening because the banks are scared. They're pricing in credit risk and they are pricing in you. Look at the earning reports. This is public information. National Bank reported a 36.9% increase in impaired retail loans, bad debt. BMO, they're up 40.5%. The banks know that consumers are cracking. They see the missed credit card payments. They see the lines of credit maxing out. So here's the reality. Even if the Bank of Canada cuts rates by another 0.5% later this year, the banks might not pass all those savings directly on to you. They're going to keep that margin to cover their own losses. The spread is widening. So waiting for cuts might actually cost you more. So we have a rate hold, we have a payment shock, and we have risk-averse banks. What is your play? Well, if you're renewing in 2026, listen to me very carefully. Do not wait for the renewal letter to show up in your mailbox. If you open that letter, it is already too late. You have zero leverage. You need to shop your rate around 6 months out. You need to be talking to a broker today, not next week, today. You need to lock in a hedge against the volatility. And if you're a buyer, if you are sitting on cash, I'm going to give you a specific search criteria. Don't just look at price, look at history. I want you to look for listings that have been owned for exactly 5 years. Properties bought early to mid 2021. Those sellers are starting, those sellers are staring down this cliff right now. They are doing the math at the kitchen table and they're terrified. They are your most motivated negotiating partners, and that is where the deals are. So be smart and be prepared.